Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me in the studio is Amit Ranjan. It's a Friday morning and the markets have opened on a muted note. Nifty opened above the 21,700 mark. It briefly dipped below that and it's now close to the day's high. But before we delve deeper into what's going into in our markets, let's look at what we got in terms of a handover from the global markets. Amit.
Thank you, Suyash. The S&P 500 index crossed the 5,000 mark for the first time on Thursday as investors reacted to earning reports. By the close of the day, of course, it was slightly below 5,000, but it had crossed the mark during the day. Dow Jones closed in the positive at 0.13%. Nasdaq closed in the positive at 0.24%. Coming to the European markets, they were slightly in the negative. The Stock 600 closed in the negative at 0.07%. Coming to the Asian markets, the Hang Seng is in the negative this morning as we speak. It is below, it's in the negative at 0.98%. Nikkei, however, is in the positive at 0.6% this morning.
All right, and Indian markets, as I mentioned, are trading on a flattish note this morning, but we are very close to the day's high. Nifty as we speak is around that 21,740 mark and continues to rise. We did dip below the 21,700 mark and tested the 20-day moving average, which is placed somewhere around the 21,690 levels, but we have seen a bounce back from there on. In fact, yesterday's low of 2665 is very close to today's low, where from where we saw a sharp bounce back. So perhaps that becomes a crucial support level for us. Sensex is also trading up 0.15%. Mid cap and the small cap indices are underperforming. They are mixed this morning. Mid cap index is down 0.17%. Small cap is flattish. India VIX is up 0.63%, very close to 16 levels. That is a problem, remember. But with that, let's also bring on board Mr. Amardev Singh of Angel One Broking. Thank you for joining us here on News9, Mr. Singh. Always a pleasure speaking to you. Now, what do you think disappointed the street about the policy decision yesterday? A status quo was broadly expected. Was the market looking for some sort of a timeline as to when that next rate cut would come, which pretty much did not come from Mr. Das?
Yeah, I would say that that definitely is one of the I would say factors, but more or less markets are the way they are. They had anticipated that there isn't going to be a rate cut, because if you look at the inflationary data, retail inflation, that's 5.4% and that's above the target rate. So that was, I think, ruled out. But in terms of the other numbers, in terms of some of the other GDP numbers which were there, so I think markets are looking at some sort of a consolidation happening. But the best part is that if you look at the markets from different perspective, you see that the public sector banks have been really outperforming. I would say SBI leading from the front, but it's the private sector banks which have not been performing. Earlier, it was the other way around. The private sector banks were performing and the public sector banks, they were not performing to that an extent. So
actually, I wanted to get to you on that, because private banks yesterday fell 2%, PSU banks were up 2%. So why are we seeing such divergence in performance?
I would say, see, primarily if you look at private sector banks, HDFC Bank has not delivered at all over the last, I would say, couple of years. Because the stock has been trading in a range, it seems that the upside is capped. Long-term charts also don't show any sort of trend happening in a near term. And also the fundamental factors also, the story also is really not very enthusiastic for the investors. Having said that, the same can be seen with ICICI Bank also. So ICICI Bank is slightly better placed in that sense. But the private sector banks, we've seen some sort of selling. Now, what's happening in the public sector banks is that with the expectations that their treasury yields earnings would increase because of the fiscal deficit targets which the government has put in for FY25, which shows that the borrowings could. So that has really helped the public sector banks significantly. And you name the public sector banks, as you rightly said, they've clearly outshone the private sector banks. And also, if I look at the private sector banks like ICICI Bank also, uh, from a medium-term perspective, it clearly shows that there is more or less consolidation happening there. If I talk about Kotak Mahindra Bank, again, we are seeing similar sort of pattern there. So the pattern is very clear vis-a-vis the public sector banks and the private sector banks. And here the public sector banks are definitely far better placed in terms of the news flows and in terms of the technical charts from a long-term perspective as well.
I mean, sure, from in terms of news flows and perhaps technical charts also, but in terms of pure valuations, I mean, considering that we have not seen 1300 sort of levels on HDFC Bank, is that a attractive level for someone to make entry for a long term again?
Yeah. So looking at, you rightly said that HDFC has got very strong support around the 13, 15, 1400 levels. Currently, it's around 1406. So if we look at, and the stock has corrected significantly from 1750 levels, it's corrected to 1400 levels, and where the markets are hitting record high. See, and HDFC Bank being the highest weighted, 13% weightage in Nifty. So that's very, very, I would say, something which really makes one to wonder as to what exactly is happening in HDFC Bank. So long-term charts also, if you ask me, they really don't inspire too much of confidence. Yeah, but it's more of those who want to maybe spread out and look at from a medium-term perspective to a long-term perspective. So they could start accumulating anywhere between 1300, 1350. Because below 1350, the stock is in for some further weakness towards 1300 levels. But yeah, those are levels where the stock will find very strong support coming in.
All right, and Mr. Singh, we are in the midst of the earnings season. In fact, we are drawing curtains on the December quarter earnings season. But we have a big one today, Hero MotoCorp. Now, Amit, I'll come to you first. What's the street expecting from Hero MotoCorp?
Yes, the company that even has Harley Davidson in its stable now is expected to post a net profit of as much as 47%, led by lower cost of production. Revenue from operations are expected to climb by as much as 21.1% to 9,728 year on year. EBITDA is expected to rise again 47% to 1,361 crores. EBITDA margins are expected to rise 250 basis points. In January, the company sold as many as 4,33,598 units, reflecting a 22% growth compared to the same month last year. Hero clocked domestic sales of 4,20,934 units and exports of 12,664 units in January. Things looking good for the motor major, and the results are expected to reflect that.
All right, and Mr. Singh, what's your take on the stock? A clear outperformer when it comes to the two-wheeler stocks. Hero MotoCorp has delivered phenomenal returns over the last year. Can it, rise further from here on? And what do you particularly like in this space, in this two-wheeler space, sir?
Yeah, I would say in the two-wheeler space, first I'll talk about Hero MotoCorp. This is a stock which is extremely strong on the long-term chart. So one should look at on any correction. This is a stock which is worth buying. There's no doubt about it. From a medium term, from a long-term perspective, we have seen the stock rally significantly, and from almost 3,000 levels, currently is around 4,800 levels. So we've seen a more than 50% rise in the stock happening, and that also quite fast. So if we go back, so somewhere from November end, the stock has witnessed a breakout and the rallies there. So this is one stock one can definitely look at from a medium term to long term perspective. And the other stock which is of interest is again Bajaj Auto. This stock is also very strong technically. The structure of the stock is very strong. Like I had earlier talked about ICICI Bank or HDFC Bank, there the structure isn't really very inspiring. Here the structure is very strong. Yes, the stocks have rallied, so there is bound to be profit booking. There would be bound to be the stock trading in overheated territory. But effectively, any meaningful correction in the stock is a buying opportunity till the time we don't see a trend change. Because even on the quarterly charts, the stock continues to display very strong momentum and very strong rally. So on some significant correction, one should look at adding the stock. But yes.
Mr. Singh, you mentioned Bajaj Auto, but unlike Bajaj Auto, when I look at Hero MotoCorp, it is not very far from its 52-week high. Is it time to cash out, and would you still advise people to get into this stock at this high price?
No, Hero MotoCorp is someone, if is holding the stock, definitely they should hold the stock. If they ask me about what are the levels, important levels, so the currently some 4,800 levels. Now, what has happened is that the stock from 11th of January took off. So from 4162 levels, it's around 4830 levels. So the stock has rallied significantly, almost I would say 15% or so rally has happened since within less than a month, which is phenomenal. Having said that, I would say one should definitely hold on to the stock, because till the time we don't see a trend change, because or they can trail their profit. So if the one wants to hold on to the position, so ideally a stop loss has to be below 4,400 levels, because that's a strong support zone, and then they can trail their levels. Otherwise, at current levels, I wouldn't recommend a fresh entry.
All right, and Mr. Singh, before we let you go, this morning BSE PSU index is under pressure. It's down about 3%. What's going on, sir?
So I would say that some of the stocks are witnessing some sort of profit booking there. So I would say it's part of I would say the part of the market dynamics. So I wouldn't read much into it till the time we see a trend change.
All right, that's the view coming in from Mr. Amardev Singh, sir. Great insights from you as always. Thank you for joining us here on First Six, sir.
Thank you.
But with that, let's take a short break. On the other side, we'll be joined by Mr. Kush Bora, and he'll bring you the latest on that.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
There's a new video around what deepfake can do.
We have seen a trailer of this a few days back.
Rollers should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT. News9 Plus, ahead of the curve.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry. right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
Welcome back. You're watching First Tick here on News9, and markets now, they are under significant selling pressure. We have broken below the 21,700 level on Nifty, and currently we are in fact below the 20-day moving average. This was a level which was providing support for the index that lies somewhere on the 21,693 mark. Currently we are placed at 21,685. And on a year-to-date basis also, Nifty has turned negative. We are down marginally. It's not like we have seen a significant fall from that, but a certain sentiment shift that we have witnessed. Sensex is also down about 0.08%, and the broader markets now, they are facing the heat. They opened on a flattish note. The mid-cap index was down marginally. Currently it's down 1.77%, has broken below the 49,000 levels. In fact, even trading below 48,500 as we speak. Small cap index, that's the worst hit segment of the market as of 10 a.m. this morning. It's down over 2% and very close to 16,100 levels. VIX has taken up, it's up 0.265% above 16.25 level. The 52-week high for India VIX is 6.5, 6.6 levels, and we are marginally below that, and elevated volatility is a problem. But to understand what's exactly going on and what's causing this selling pressure in the market, let's also bring on board Mr. Kush Bohra of kushbohra.com. Thank you for joining us on News9, Kush. Always a pleasure speaking to you. And till yesterday, the overall texture of the market was looking rather positive. Nifty was making higher highs, higher bottoms, and then we saw a 1% crash yesterday. In fact, even today, we have broken below the crucial support levels. What's your take on the markets now, sir?
Hi, first up, a very good morning to you and all the viewers. Always a pleasure to be here. Well, storm in a teacup. That's what I would call the index movement, at least. And for a very simple reason, if you look at the broad range on the index is 21,600, on the downside, and 22,000 or maybe perhaps 22,100 on the upside. The index has seen a fair bit of volatility within that range. Now, the ideal way to play the market, or at least on the indices, would be to play this range. The closer you are to the support levels, perhaps a buy trade from there on, and once you are closer to the upper end of the range, book some profits. That's how I would read it. Also, a fair indication of this had come around because if you see India VIX, we've seen India VIX at an elevated level of 15, 16 for a while now. Earlier, one of the assumptions was that because of the events lined up, which was the Fed meet and then the budget thereafter coinciding, the VIX was elevated. The VIX did not cool off after that. So perhaps this is an indication of how the markets are perhaps going to behave in the coming times as well. On the near term, my view remains the same. This is still a buy on dips kind of a market. 21,600 to 21,500 is a good support zone, and on the upside we're looking at 22,000 and 22,200 as the upper band.
All right, and Nifty Bank, we have been talking about Nifty Bank and how it has been a major laggard in the past many months, in fact, if you look at it. But the banking index in the last two sessions has taken support at its 200-day moving average, placed somewhere around the 44,900 mark, and we are very close to it as we speak, Kush. If we do break those levels, what sort of a correction, let's say in percentage term, can one expect?
So don't rule out another a 2 to 3% kind of a downside on the bank Nifty. One of the key support zones below the 200-day moving average that we're looking at is 44,400. This is the low that the index had made somewhere close to I think late Jan. So I suppose that is one level that could be retested. Today, surprisingly, we are seeing the bank Nifty a little higher. But part of that surprise is explained by the fact that the bank Nifty had already gone into a bit of an oversold territory, at least on the PCR. If you see, and hence a bit of a support zone. The 200-day moving average also playing up. But I think if someone was to still play this trade, I think 44,400 would be a positional stop loss, and then on the way up we're looking at 45,800 and 46,500 as the level. And as I said, this I'm looking at a broad range. So the texture isn't all that great yet. A lot of the FII selling can be attributed to the fact that the bank nifty being under pressure, because we know historically IT and banking have been the preferred sectors for the FIIs, and the ongoing selling will perhaps keep some pressure on the bank nifty intact.
All right, and talking about the texture of the market, the broader markets are seeing a lot of selling pressure this morning. Both indices are down 1.5% to 2% as we speak. And in the past 3 or 4 instances when we have seen a major correction in the small cap and the mid cap index, they have bounced back and they have clawed all those losses in a matter of couple of sessions. Is anything different now?
Not really. I think that could perhaps be the texture going forward as well, because a lot of these names were overheated. If you see, especially on the PSU side, I mean, a lot of these stocks had actually gone into overheated territory. Now, if I take a cue from a similar setup in the derivative stock, a lot of these stocks were knocking on the thresholds or the doors of those strike prices from the call option side, which had a very high open interest. So on the cash segment, there was the stocks that were heated on the RSI, and then on the derivative side, there were stocks which were close to the high OI call basis. So correction was due, and also it's healthy. Also, I think a lot of traders and investors and your viewers will be feeling the pain today, not as much yesterday, because yesterday it was just the indices that were hit and perhaps a cooling off, seeing a bit of a profit booking. Today, even when the indices are flat to positive, a lot of these mid-cap and the small-cap names have come under pressure. But I think this could be short-lived. A round of profit booking, perhaps it could extend to a couple of days more. And then we could expect a similar rebound once these levels cool off.
Good morning, Kush. I'll drive your attention to Life Insurance Corporation of India, India's largest insurer, which declared their results yesterday. 49% rise in net profits, close to 5% rise in the premium income, which grew to 1.17 trillion in the last quarter compared to 1.11 trillion in the same quarter last year. Overall market share of the company remains at close to 60%, 58.9 to be precise. Solvency ratio, which is important for insurance companies' ability to meet long-term debt obligations, rose to 1.93% against 1.85%. Shares have jumped 20% in the last 5 days. Today they have been slightly choppy. I mean, they were up 4.02%, in the negative 0.75%. Right now they are in the positive 0.71%. What do you make of LIC? They have fluctuated from a low of 530 to a high of 1,175 in just 1 year. How does one approach this stock?
Buy on dips. That would be the broad strategy that we're suggesting. Incidentally, every network that I've been on, I've been asked this question. Thankfully for us, we had a buy call on LIC for a while, and 1100 was our eventual target. That's been hit. We will revise this close to about 1200, 1250 zones from a positional standpoint. But right now, a stock as big as LIC in terms of the market cap has actually run up quite sharply. And as I was mentioning a while ago, that a lot of these names are in the overbought territory. LIC also is a case in point. So from my perspective, it's not a bad idea to take some money off the table from this stock. Perhaps a good entry point here would be 1,070, 1,050 kind of levels. So buy on dip is the strategy that we have on LIC. Any kind of dip closer to 1,050 is an entry point for me, and then we're gunning for 1,200, 1,250 kind of levels on the upside of our LIC.
All right, and I want to talk about Zomato also. Phenomenal numbers. Are you looking to revise price targets over there as well? Because the profit figure that has jumped up by somewhere around 280% on a quarter-on-quarter basis. Revenue jumps across segments was phenomenal on a quarter-on-quarter as well as year-on-year basis. In fact, many brokerages have also revised their price targets. Kush, what's your call?
165, that's the revised target that we're looking at on Zomato. even during its a consolidation phase over the last month and a half, we maintained a very clear view that this is a consolidation phase only, and nothing changes structurally for the stock, at least from a technical standpoint. Because remember, the stock had actually seen quite a bit of a run up, over the last year, gradual but a steady run up. After that, a bit of a consolidation is warranted, in fact, even healthy. So I think that view sort of come to fruition, where 150 was our 150 was the revised target that we had. That's been achieved today. But I think there is still a lot of steam left in that. We are seeing the stock up on back of very good volumes. So I think the next level that we should look at for the stock is 165. Anyone who's holding this stock should continue to hold. A trailing stop loss here would be close to 135 kind of levels. And again, nothing's changed structurally. In fact, it's only gotten stronger. So we're looking at 165 kind of levels on the upside.
And Kush, the other company that posted their results yesterday were the makers of Ultratrek Cement, Grasim Industries, the flagship company of Aditya Birla Group. Their profits jumped as much as 48% to 1,114 crores. Consolidated revenues came in at 31,965 crores, up almost 11.6% from the same quarter last year. When we look at the stock, today it is in the negative. Last 5 days it has been in the negative, almost 4.17%. Last 1 month also it has just been partially in the positive, 0.12%. Is it a time to get into this stock right now, as it is close, basically touching lows at the moment?
So it depends on your perspective. I'm assuming this question comes from a more positional and investment kind of perspective. Then there is not too much of an issue. The stock's actually not gone anywhere, if you see, since December. But before that, there was a good run up on this stock as well. And once again, it is back to those support levels of 2000, 2050, where the stock has taken support multiple times and has rebounded. The only thing is that the stock is seeing supply pressure on the upside, and that could perhaps abate going forward. But as of now, given the kind of support zones that we've seen around 2000 and 2050 kind of zone, here it's a good idea to accumulate. Again, as I reiterate that this has to be a positional view. If that is the time horizon 3 to 6 months, then for sure this is a good time to accumulate or enter into this stock. 2000 is where I would now place my stop loss. On the upside, we're looking at levels of 2120, and then once that is taken out, 2180 as the positional target. So yeah, the stock is in a bit of a consolidation mode. A good time to enter. Just have some patience with it, as it's actually just in a consolidation mode, from even if you look at it from a weekly and a monthly perspective.
Kush, thank you for joining us here on News 9. Hope to speak to you very soon, sir.
Always a pleasure.
But Amit, the markets are quite choppy this morning, and of course VIX is above 16. That's why we are expecting the volatility to be high in the markets, and Nifty, as we speak, has clawed back from those early morning losses, and it has in fact once again taken support at 21,665 in that sharp fall and the bounce back. Currently it's above 21,700 and moving higher, but we can't really trust these levels and the move higher, because again volatility is high, there is no clear direction for the market, and there is earnings going on, and at least my sense of things is that whenever if there is a slight deviation from what the street is expecting, the markets are going to punish you. The markets are going to make sure there is a profit booking, and in fact when you meet the expectations, we are seeing a lot of these stocks correct over the next few sessions or so, and that's exactly why we are seeing volatility pick up both in individual stocks as well as across sectors, and the markets are choppy. Sensex is also up now. It's back above 71,500 level. The mid cap and the small cap indices, they are still trading with cuts. They opened on a flattish note. The mid cap index is down over 1%, below the 49,000 after a break of 2 sessions, and the small cap index, that is also I think that's the worst segment in the market right now. It's down about 1.5% as we speak, and currently just hovering above the 16,200 levels. But with that, it's a wrap in this edition of First Take. Keep watching News 9.
Bangalore traffic is an example of something that has gone wrong with